Hey, it's Jeff Tamburello with the Southwest Florida RIA. I'm also with Steelbridge Realty. Since we're going to use some MLS data, we got to say where it came from. I am with the world famous and esteemed Brett Ellis with the Ellis team. He's a fellow presenter at our general meeting coming up. How you doing, Brett?
I'm doing great, Jeff. How you doing?
Good. So actually really looking forward to this meeting. It should be fun. I did a test run today, and I believe we're going to have Denny in there video conferenced in with a podcast mic and doing through Zoom, which we're doing right now, which is really cool. So what are you seeing out there? I hear when I talk to people about the market, I hear everything from it's never been better to it's crashing right now. So what do you think?
Well, I'm looking at numbers month by month and year over year for the last 4 years. And basically, 2018 is every bit as good as every year since 2015. We are about 540 units shy of the record back in 2015 of 11,537 year to date. So we're 11,497 year to date. That beats 2017. That beats 2016. Our dollar volume is strong because while our units are high, our volume is even stronger. And if you look at some of the graphs that we're looking at, which we'll present at the meeting, I think you're going to find this market's a lot stronger than a lot of people give it credit for. You got to be careful not to go by an agent's personal production because that's the way the market feels. Yeah. But sometimes the way the market feels isn't what the market really is. And sometimes if you just change your attitude, you'll change your altitude. And if you see what the added altitude really is of the market, it might influence some of the agent's attitude to get out there, work harder, or just change the way they're working, and then their field will turn around and whatnot. So you and I are cut the same, Jeff. We're just all about the facts, and they are what they are. We're going to present what they are, and then let everyone else decide for themselves what they want to do with it.
Well, I think it really equates to you got to make sure that if you're fishing in a pond and to go fishing you got to buy bait, which that's your money. You got to make sure you're throwing your bait in a pond that is that has some fish in it. And this is for investors. This is for realtors. This is for anybody affiliated with real estate. There's some markets that are really working, and then there's some markets that just really aren't working anymore. Is the best way I know to put it.
I'm going to share a case study on Lehigh Acres versus Cape Coral. And I'm going to ask the $30,000 question. And then I did some study on that this morning, and I put that in a format I think will be easily understandable. And if you put your investor hat on, it's probably going to make a big difference where you look at putting your money. And then I'm going to ask people, while they have their investor cap on, to put their consumer eyeballs on and kind of look at it how a consumer would look at it. But we're going to look at it more from the investor perspective, and I think it's going to shed some light on where to put your money coming into 2019.
What's interesting with Lehigh Acres is it really jumps out more and more out of the spreadsheet. If you go back 10 years, that market was there, but it really wasn't. It was really starting to emerge, or actually coming out of the crash where it first started to emerge. But you now have more dollars flowing through Lehigh Acres than Fort Myers Beach, which to the traditional mindsets in Lee County, you think of Fort Myers Beach, you think of this big market until you realize that now Lehigh Acres has grown to the point that for every dollar that flows through the beach, I believe 2 go through Lehigh Acres. That's something new. That's not something traditionally that was normal.
You might have 60 single-family sales in a month at Fort Myers Beach, if that, and you may have, I'm tracking 500 plus just 1,400 to 1,600 square feet. So put that in perspective.
Yeah.
There's some serious business being done.
The beach had an amazing November, though. If you look at the stats, year over year, the beach for November was like, wow, where did all this come from?
Yeah, and I think they were silent the few months prior, but it's time to start, watching the beach. If it's going to come alive, it's going to come alive right now.
It already has. I mean, you look at the volume, check out the volume November of 18 versus 17. It's really like, where did all that come from? And Alva, all the new construction sales are popping in Alva with Riverhall and all that. And Alva really looks very impressive, and they're just really beginning. I mean, there's Lennar just offered up a large chunk of Riverhall that's going to be developed. I was kind of blown away. I got asked to speak for like a training session for I think it was Neil Holmes, Cat Foster. I'm sure you know Cat. And I went out there, and when I started preparing data for Veranda and started preparing data for River Hall, I was kind of blown away at the activity in River Hall, that if you really weren't there, you really didn't realize how many new homes have been sold in just that little pocket.
I tell you what, you can't turn a blind eye, because has there ever been a part of the county where you haven't been there in 3-4 months, and you drive back there and you're like, holy cow, look what just happened in 4 months. And that's the same thing in neighborhoods that's happening, and it's the same thing in these commercial buildings just popping up everywhere. You got to stay on top of this stuff, and I'm not saying you have to, but you don't want to discount something because things just pop up out of nowhere.
Yeah, I want to share real quick something. Hopefully this works, because we both seem to be like we're technologically. Can you see my screen?
No, I just see mine right now.
Okay.
You know, speaking of Lennar, Jeff, are you starting to see Lennar make a pop in this market?
They always have been. They're when it comes to companies, I don't know of a smarter company strategically than Lennar. If you go back and look at their history, I mean, they in the early '80s started securitizing mortgages. When the market blew up, they formed Rialto Capital and bought a bunch of bad debt from the FDIC. The core of that company is absolutely brilliant, and I am seeing them start to significantly jump into product that I didn't even think was what they do. The same thing, I'm watching some other builders like Neil Holmes going into the Veranda. That's not normally what you would equate with Neil. You know, the Veranda kind of amenitized community, but what I'm not seeing is a whole bunch of scattered homes. I think they're still kind of snake bit on that.
Yeah, I'm starting to see, Lennar capitalize on that WCI acquisition, and they are really starting to pound it now. And Pulte and some of the others I think are starting to feel Lennar's, Lennar's pulse, because they're coming live, and I think they're in that value end, and that's where they're winning right now. And as I call this market, if I had to summarize this market right now, my one word would be pressure. We're starting to see market forces in effect, and it's putting pressure on segments of the market. And companies like Lennar, some of those value builders, you've got interest rate pressure, you've got all these different pressures, and something's always going to win out. There's not any one, and pressure it doesn't make the market, but it can affect the market. It can slow down the market. It may not take positive and turn it negative, but it can slow the growth. But I think pressure is probably the one word I think going into 2019 would be my theme for 2019.
I'm seeing a lot of people trying to equate corrective supply and demand issues with the last crash, which was the aftermath of a mania. And it's such a difference from, like, say you have a segment of the market that corrects, everybody wants to immediately run back and put on their '06 hat and think that that's what's going to transpire. And we don't have anywhere the metrics of what the market looked like in '06 versus now.
Well, you think about what we had back in '06. We had, I call it a hairdressers and flippers market. Everyone thought they'd flip for $100,000, and everyone got the real estate advice from a hairdresser. But we didn't have the end users. Converse that with today, and we have end users. In fact, we have so many end users. Interest rates, I think, are putting downward pricing pressure, not enough to slow the momentum. It slowed the momentum, not enough to change the momentum. But interestingly enough, it may put upward rental pressure on these renters. So they're going to get hit with a double whammy. The rents are going to go up. At the same time, if they decide to go to purchase, their payment will go up for the same money. So that's why I think the theme this year is pressure. But no, we do not have, I don't see a big bubble like we had back then, because the market forces are completely different. This is a rational market. This is a supply and demand market. That was not a supply and demand market. That was a supply market ahead of demand.
No, that was a mania. I mean, it was really, it was a historical mania. It was the South Seas Trading Company. It was the .com of the early 2000s. I mean, it got to the point, I always tell the story at the RIA that in '06, they camped out for that $330,000 North Cape house that rented for $1,600 a month. Fast forward to 3 years when you could buy that same house for $65,000 and rent it for $750, $800. Nobody would buy it, and it actually on paper made a whole lot of sense at that $65,000, $70,000 number.
It's also the herd mentality. So if the herd's going one way, just as a rule of thumb, think about going the other way, because the herd was wrong back then, and in 2008, 2009. The herd was wrong then too. So the herd is wrong more often than it's right.
Totally agree. Well, cool, dude. I look forward to this Wednesday night. I think we're having a lot of fun, and it should be a really good meeting, and I think we're all going to get something out of it, because you see stuff differently than I do, and the tech, God willing, we'll have Denny in there. Everybody has a slightly different outlook, and that's what I really look forward to these type meetings for.
Yeah, learn something from everybody, and you know what? All could be right at the exact same time, and just have a little twist too.
Cool. Look forward to it, dude. Thanks, man.